let's talk about the market, and is it overvalued? Is it overvalued? You can see where it is now. Okay, let's go through the numbers. First of all, this is kind of interesting. 5.3 trillion in cash. Now, this is as of just about a year ago, right? Not quite a year ago. There was 5.3 million in cash, which was a record, far greater than 2008. Now, we know what happened in 2008. I mean, 2008 was not a good thing. The credit crisis, banks, the end of the world. Guess what? Guess what the current number is? This is as of the end of February. It's up to 6 trillion. Now, you would think market's up 20+%, and then this year it's up another 8%. You would think this number would come down. What's going on? What's going on? Well, number one, if it bleeds, it leads. The media creates fear, right? We all know this. The second thing is you got the orangutan and Sleepy Joe, you know, front and center. That creates uncertainty and fear. Oh my God, every party, the other one has horns. In fact, it's interesting. I pulled this from JP Morgan. Look how the confidence in the market changes depending on who's in office. When W is in office, you're talking about the Republicans' confidence in the markets and the economy was at just under 70%, right? That's the red line. Whereas the Dems were down here in the 10-0. But then Obama comes in, and of course, the 2008 global credit crisis, of course, Bush's numbers collapsed, as you can see, among everybody. And then Obama comes in, and of course, the Dems were more, the blue line, the Dems were more excited than the Republicans. And then Trump comes in, and look what happens. The consumer confidence goes up to 82%. And of course, the Dems were all the way down. You know, the low was down in the 10s. Now Biden's in, and the Dems are at 44, and the Republicans are at 33. The truth of the matter, though, is if you look at the numbers, if you look at real GDP growth, which is the general growth of the economy, the Republicans, Democrats do better. The economy grows about 4%, Republicans about 2.8. But as far as the S&P, Republicans do better. The average is 12.9 as opposed to the Dems are 9.3. Divided government is 8.3. And we're probably going to have divided government again, right? They're going to. So what I'm saying is, I don't know who's elected president or government really affects the markets. Because Biden's budget, quite frankly, is not going anywhere. His budget's collecting dust, and it collected dust last year when the Republicans took over the House. So it's a non-issue as far as I'm concerned. But a lot of people, not so much. Joe, you could talk to this one, the real estate market. And I know, Joe, you're commercial real estate, and we know what's happening in the commercial real estate market. The vacancy rates are really taking off. And Joe, you could talk to that better than I could. But I know that a lot of those buildings downtown aren't in a good situation. A lot of those people invested in private equity, and I'll get into private equity. I've had clients recently say, well, that's the safest thing you could buy. I go, well, not unless it's great until it blows up, as you know. Anyway, I did see this, and I was kind of shocked that Denver, according to the U.S. News and World Report, was the hottest market in the country. I would have never believed it by how little traffic there is. I mean, you know, where all these people, you know, they're staying at home. Anyway, so if you're selling a home, that's something to think about. Let me go back a second. Mr. Slide. This is an important slide. If you, those who have been at my last lectures, other lectures, this is Warren Buffett's best indicator. He always says when there's blood on the street and people are very pessimistic, he's buying. And you can see when consumer confidence is in the toilet, the numbers over the next 12 months are very good, 22, 20, 29, 32. When consumer confidence is, everybody is exuberant, Warren Buffett says, I am selling. And right now we're still below trend. There's a lot of pessimism. There's a lot of money in cash. So let's see if we can't figure that out. Let's see if we can, what that means for the next 12 months and what that means to your portfolios. Well, first of all, we all know that 70% of the economy is you guys, okay? It's the consumer. So I do like Peter Lynch. Remember, anybody remember Peter Lynch, Fidelity Magellan? I read his book, and he says, I go shopping with my wife, and I buy where all the stores are full, and I sell all the stores are empty. No matter where I go shopping, it seems like the stores are crowded. Consumers are buying and they're spending, and I walk around the mall and go, well, I'm bullish. You know, it's hard not to be when you see all that going on. Unemployment is at record lows. It's at record lows. Job openings are at record highs. Layoffs are at record lows. Now, let's talk about valuation. Valuation is, are stocks overpriced based on what they earn? Well, we're at one standard deviation. One standard deviation is definitely not overvalued. Markets were very overvalued during the dot-com bubble. You guys remember the dot-com bubble, 2000 to 2003? Very, very long, 3 years of hell. Remember Lucent Technology, Lucent Boulevard? Stock was trading at 120 times earnings. It was the early days of the tech, right? Now we have the Magnificent Eight, right? We have NVIDIA. NVIDIA went up $100, went up 100% like a week. This is that microchip that's in these high-speed computers. It's the AI, it's driving the artificial intelligence. The new wave of the internet is artificial intelligence. So if you owned NVIDIA, right there, stock's at 900. I think it's down a little bit today, $890. Darn it, I should have bought some of that. Okay, so do you own some of that? You do, okay, you do. Okay, so anyway, the bottom line is the market, one standard deviation is not overvalued if you think earnings are going to continue to do well. If in fact earnings, if companies start slowing down, this multiple, price to earnings multiple, starts to rise, and then the market could become overvalued. But I don't know that that's going to happen. Inflation is coming down. The CPI number came in yesterday, 3.8. The core is at 3.2. So inflation has picked up a bit, but the Fed says we're going to still look to lower at least 2 or 3 times. They're looking at 4.6 on the Fed funds rate by the end of the year. Not if inflation keeps going up, they won't do that. But here's the big slide. This is the one, this is the reason why most of the experts are wrong. I listened to Bloomberg, and here's what they say. I don't understand how this economy has held up so well. Everybody was predicting a recession, right, a year ago. We're going to go into a recession. Not at all. The market is exploding. So I'm sitting here going, well, what's going on? What's going on is corporate profits are as good as they've been since the 70s, the early 70s. In other words, think about this. There's gouging going on. You got consumers, you got businesses. Okay, so most of the people here have been in my house. When I go take an Uber from the airport, it's $55. I got back from my place in Florida 2-3 weeks ago. It was 120 bucks. 120 bucks. So tell me that's double. Now, why is it? Has gas doubled? Could anybody explain to me how that's price gouging? So think about this. If my margins double and my volume gets cut in half, then I'm still making the same amount of money. That's what's going on. And you want to hear the rub on this thing? So I'm coming home from the airport. I got my Great Dane. I got my bags. The lady that picks me up is from Virginia. And she's like, is your house in the mountains? I said, well, it's in the foothills. Well, I don't know. Is it windy roads? Well, yeah, but they're paved, So she gets to the bottom of my hill. She's like, I ain't going any further. Now, my road's a quarter mile straight up to my house. It's 2 in the morning. It's cold. I don't feel well. I got a headache. I got bags. I got my dog. I'm not going any further. I'm turning around. This is a true story. I paid $120 for that. I didn't give her a good review, and I didn't give her a tip. I gave her a bad review. But anyway, gouging, it's happening all over. And I think people say, if we can, let's do it. And I think that's why this economy has done so well.